Hey guys, just let me know if you can hear. Uh, what is going on? Cheers, Peter. How are you, mate? Okay, let's see what's going on. Da. NASDAQ. Uh, in fact, where should we start? Let's start with gold. Ooh. So this morning we were looking for PT trade. We were waiting for support to form, buy a candle, waiting for a wick down, and this is what's happening right now, actually. Dun, dun, dun. All right, so let's see if we get a 15 minute. We've got to wait 11 minutes. Um, if it just goes, it goes. I'm not going to trade it. We've got basically 50 pips to the top of the range. Now, we know that. Hi Anna, not seen you in ages. Lola, how you doing? Threw in a few pocket dials earlier in the group. Saw you walking down the road. Here you go, pal. God. Sorry guys, 1 second. My dog's been a bit fussy. Right, there we go. Right, so gold might go without us, and if it does, it does. I'm not bothered. Um, what we want to wait for is markets to set up. So I've just been having a coaching session with one of the members. And hi, Nigel, how you doing? And you know, mistakes happen. Discipline can go out the window. But like anything, it's like how do you snap? How do you break the cycle? What is it that you need to do to stop yourself from making the same mistakes that you did earlier, or that you can feel yourself doing something, let's say a revenge trade, or let's say, I don't know, over risking because you lost some money. You know, there's certain mechanisms that you can do to change the way that you behave, and that could be as little as after every trade, you don't place another trade within 15 minutes or 20 minutes. After every trade, win, lose, or draw, you step up, you stand up, you go for a walk, you listen to something. Um, even, like going down. So committing to a fixed daily amount, yeah, that's a good idea. But unfortunately, you might look at it and go, "Oh, well, my amount is this," and you see a setup, and you might change, let's say, the lot value, or you might just go, "I'm going to place this. It's only just going to take me over that." What I would tend to do is think about, if you go into if you speak to someone about NLP, what they'll tend to tell you to do before you do any kind of action, it's about you take 3 or 5 deep breaths before you do the action. And the purpose of that is so that you don't act on impulse or you don't say something that you shouldn't do. You take 3 breaths, you think about the situation. So the other week we gave you a checklist. With the checklist was to help you with every trade. So maybe your checklist you have to amend. So, let's just go down a hypothetical route now of, right, this is what the checklist looks like. So let's say it's a breakout trade. So we're going, right, breakout. We want to start thinking about principles and not just the trade setup. Maybe we need to put in something about us. So we're going to go trend. And then maybe you go, is it, um, you go, is it, let's think, what's the best way to do it? If we're going to do a checklist, so we'll put impulse, correction. Okay, so it can only be one of them. It can't be an impulse and a correction. So what's the trend? Are we trading with the trend, meaning it's in an impulsive move, or is it in a corrective move? This is going to be a way for you to adapt your trade management. So if it's in a corrective move, you're probably going to start applying the 70% rule. Okay, then we want to know is resistance. If there's resistance, mark it off. Then we go closed above. If it's closed above, then fantastic. We can go to the next one. Has it had a wick down? If it's had a wick down, then we can now start thinking about placing the trade. So we can, before we place the trade, so that's the setup. Then we go, have we lost a trade or lost a trade prior? If it's a yes, maybe we then think about mindset. Uh, am I in good mindset? The purpose of this is you want to know if you're revenge trading. Now, again, remember, you're not going to have to write out the whole checklist. This, you just you write it once, you put it on your chart, and then you just copy and paste it every time. And then every time you place your trade, you're just going to put a tick or a yes or a no. Am I in good mindset? Or you can put in other than that, you might say, am I revenge trading? It's a simple yes or no. And if you've lost a trade prior and you put am I revenge trading, if you put no, then let's put score the setup 1 to 10. Let's say 10 being good. If you look at this and you score it, let's say 7 or 7 plus, then you come to the next thing, which is place the trade. You might think it's a ball ache, you might think it's tedious, you might think it's not worthwhile, but the more time you take between a losing trade and completing this, listen, a breakout is not just going to occur in a split second. The setup will come, so you've got time to fill this. And if you're rushing to fill this in and rushing to do your analysis, then you shouldn't be placing a trade. Yep. So look at how you're gonna apply yourself because simple little solutions like this will really benefit you um, when it comes to not just placing trades, but keeping you out of crap, keeping you out of trades when you know you shouldn't, but you've got FOMO, you've got a big loss, and you're going, right, I want to make that loss back. You know, psychologically, you know you shouldn't be doing it, but you haven't broken the habit. And the only way to break the habit is by doing something different to your previous trades or the previous ways you were to place in that trade. And the only way you're going to get out of those scenarios is by breaking the cycle, and it will come by doing something like this. Or you just, after a losing trade, you just get up and go for a walk. I read that as I like revenge trading. I was like, oh shit, we got problems now. Yeah, so simple little solutions. Remember, most of you, and I've just seen that there's uh, members just hit their 4% daily drawdown on one of their funded accounts. I see that you're not the only one and that will make mistakes. You're not the only one that is going to hit your daily drawdown. These things occur to everyone and not just retail traders, they occur to professional traders. Remember that the prop accounts and the way that they have structured their daily drawdowns um, is for you to fail. They're not structured for you to win. If they were structured for you to win, they'd all go bust. So you have to do something different in order to succeed. if you're like the rest of the people that fail, you either have to do something different. And doing something different is being disciplined. It's putting a plan in place. It's following the plan to the T. Yeah. Now, the 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 accounts that give you the most flexibility from setup to actually not passing, but to getting a payout is Instant FX Capital because they give you a 10% drawdown fixed. It doesn't, and there's the link, guys. It doesn't, if you make 3%, the drawdown doesn't move up 3% behind you. You're not having to go through any hurdles either. There's no daily drawdown. So even if you have a bad day, it's unlikely you're going to get kicked out. So, you know, really look at the the prop challenges that you take on. And if you have a look and you notice that, hold on, every trade that I'm taking or every account that I'm doing, I'm getting my 8% or my 10%, but every time I screw up, it's because I'm hitting my daily drawdown limit. Then what you need to do is you need to change the risk management on your account, or you change the account. So let's say you keep hitting 4% every time you go live, or every time you're in a prop account. Then change it so that you don't keep trading the same lot size. Reduce the lot sizing so that you don't hit your 4% in daily drawdown limit. So this is what we'd be looking for a breakout based on something like that. Now, in terms of gold, I will be looking for sells below 2941.3. I'm going to look for sells below there. Now, what would it have to look like? I think I'd need a 30-minute candle close below. Um, there is room for buys above. I'm not doing any buys above. No momentum trades today. 29. Let's call it 29.48. The news has already been out. I don't think there's any further news today. Yeah, unemployment claims came out. They were slightly better than forecast. PPI missed, came in flat and was expected at zero point 0.3. Core PPI came in at minus 0.1. It was expected at 0.3. So mixed data for the US. But what we are seeing is strength in the US dollar today. And we're seeing a mixed bag. We've got NASDAQ opening in, or not just the NASDAQ, but we've got New York Stock Exchange opening in 14 minutes. Let's have a... right. Okay. So, breakout. If we break to the upside, is that with or against trend? If we break out to the upside, is that with or against trend? In fact, I'm just going to do a quick poll because I'm going to do a poll for you guys. Okay, there we go. I've just put a poll, guys. Let me know which one of those is most applicable to you. Okay, yeah, so it's with trend. So if it's with trend, we can be a little bit more flexible with how we manage our trade. So let's say we look for sells underneath 29.41. If we go for sells underneath 29.41, if we get the setup, what rule could we apply to be, oh God, what rule could we apply to not just protect capital, but to be, uh, what rule could we apply if it breaks below here and we get a setup? What rule can we apply to our trade management to protect capital? Now, this is obviously going to be more for members. Those of you that have been attending more of these live streams will probably know the answer, um, but you may not, even if you've been attending them, because you might not understand when I've mentioned it in the past. Well done, Vic. Yes, Frankie. 70% rule. So, does someone want to explain what the 70% rule is? 70% off at TP1. No, that is not the 70% rule. Uh, um, it is, so the 70% rule means wherever price is in relation to your target. So let's say your target was 100 pips. If price gets 70% of the way to your target, you move your stop loss to break even. Now, listen, this is where one of my old mentors, he said the greatest book you will ever read is the one you write yourself. Meaning, your journal, your trading journal, is going to be far more valuable to you than anyone else's book on trading, psychology about trading, trade journal. Your book is going to be the most valuable one to you because it's about you, it's about how you felt, it's about your trades, it's about your setups, it's about what happened to the trades afterwards. That's where you're going to get most development from. That's where you're going to get most learning from. This is what I was just saying in my session previously with one of my members on when we're having a mentoring session. You know, I said we need to work out what your strengths are, and that means every trade that you take, note it down. What is it? What type of trade? What strategy was it? You might find that 80% of your profits come from, let's say, 20% of your trades. It's like Pareto's law, right? So that means the other 80% of the trades that you're doing are causing you grief and stress. So focus on the one system that you really are good at. So let's say our members trade breakouts, they trade false breaks, they trade BPCs, they trade flips and range trades. Okay. Now you got like five systems. The BPC and the range trade are very, very similar. So you got five systems that interlink that they can trade. Let's say out of those five systems, your profit is split equally amongst all five systems. Then I'd tell you, right, you trade all five systems. Let's say Pareto's law theory, 80% of your profits came from breakouts. And then the other 20% of profits came from the other four systems. Well, I kind of tell you, what's the point in trading the other four systems? You're creating work and stress for yourself that we don't need. So just focus on the breakouts. It might be the false break, and then you can start to lever that, meaning you can go in at higher risk. You can really ramp things up. So knowing what you do and knowing your stats is going to be the best book you ever write. And this is why it may seem tedious work writing it down. It may seem tedious work doing the checklist. But if you really want to, you know, take things to the next level, and we've got a few traders that are doing that, but even those traders, they'll make the occasional blip and hiccup. We've got Anna who's been flying. We've got Peter Armand who's been flying. All of these guys, they're taking some decent payouts from the brokers. We have Leon flying, and then he has a hiccup. Everyone that is doing really, really well. Frankie's doing really well. We've got Peter Cole does really well, and then we'll have a little moment. These Everyone is the same. It's about look at the book, look at what you're doing, and if you're not creating a journal, why not? If you're not making note, if you're not doing a checklist, why not? Right, let's have a look, see what the polls were coming in at. Who struggles? 44% yes, 44% no, 11% I don't have a plan. Okay, right, let's see. So we know what's happening here. We've got our plan mapped out. NASDAQ. This is a horrible place. I wouldn't even entertain anything on the NASDAQ right now. 19,600. No, I'm absolutely nothing for me on the NASDAQ. If we get above 19.7, I'll look at trades. So buys above 19,708, and we will look for sells below 19,373. Sells below 19,373. No news to worry about. Right, let's have a look at the ranges that we can trade into. 180, 176 pips. Uh, So we've got plenty to go up there. 19,373, 85 pips below. Now, we'll have some of that, right? So I don't care which way it goes, but this for me, I'm doing nothing in here. If we go to the daily chart, what do we notice? Well, yesterday did something slightly different. What did yesterday do? What did yesterday do? Where's my chat gone? Got the sell stop triggered, Vic. What sell stop? What, what sell stop have we done, guys? There's no trade on the DAX. There's no trade on the DAX. Uh, uh, no, look, I mean, look, something you got to be aware in mind here is if you're using the hourly, the support level's here. The last support level was there where buyers came in. This closed below it. So you need to see price close back. Yeah, exactly. Ugh. Ah, Vic, sorry to hear, mate. Right, we've got to. So, what are we seeing here, guys? What? Tell me what we're seeing. So it's broke the previous high and respect the low. Okay, but look, this was support, right? And this candle's so we can get rid of it now. But look, this is what you had like a base formed here, and then you got a small micro range that being formed. Then this candle breaks out and breaks below the low, and then comes down to test the bottom of the range. Now prices come back up to test this area. I wouldn't want to do anything here because it's a bit of a lottery. Yeah, it's range consolidation. Um, let the market break out, and this is where I think a lot of you are getting a little bit impatient. And you know, in on the live trading day yesterday, I even said about myself when I'm running YouTubes, because I'm looking at a potentially liquidity building. Um, we don't know. It's not liquidity building right now. Right when the market's going to consolidation, it's either accumulation or distribution, and we don't know. You've no idea until after the event. So if it was accumulation, then price will rally. If it's distribution, price will break out to the downside. So consolidations, you don't know until the market tells us. So what I was saying yesterday is, since I've been running YouTubes, because I'm looking at potentially new people exploring the world of trading, I find myself looking to potentially trade more so that people can see what we do. But the realistic and the real approach is, look, I want you to I want you to be in the mindset of that trading is what you'll do least of. When we're looking at the charts, trading maybe 2 to 3% of the time, 5% maybe at tops. The rest of the time we're sat there waiting for the market to give us the setup we want. We're not literally sat here going, oh, trigger happy, buy, sell, buy, sell. But it can be easy to get in that state of mind. It can be easy to go, oh, look, we've had a bearish engulfing candle, we've had a bearish candle close below, right, wake up, let's sell the low of that. Sometimes, before you place any trades, just look out, zoom out a little bit, go up a time frame, right, what do we see? So right now, this consolidation is just looking a bit evil. I don't want to do anything until we get a move to the upside out of here. This one can go. Potentially a move to the downside. And then if we do get a move to the downside, we're probably going to come into this area here where it's the lower part of a bigger range. If we break below that, then fantastic. We've got more room to go. um, So these are things that we're just going to sit on our hands and wait for the market. Right, the NASDAQ is open now, or the NYSE is open. So let's see if we can get any moves to the upside or whether we're going to break out to the downside. Uh, do we have any new people on the live stream today? Anyone that's not been here before? And you guys, I don't think you lot are getting lazy as well. There's no comments. I'm doing more and you're doing less. I want to see. I want to see a fistful of comments coming in today. No more of this half-hearted. Look at it. What did we get yesterday? Not yesterday, the 12th. 7 comments. Some of you decided to pull your finger out and put a couple of comments in there. So I know Anna did and she asked. But then today we've had Lisa, Frankie, and Peter Cole. Come on, guys, pull your fingers out. Start typing. What do we have on the 11th of March? And then 6 comments. You guys. No, 4. 2 of them are mine. 2 of them are my replies. So I wanna see some people really, really starting to make an effort now. Right. Okay. We're looking for price to break out. Bias is going to remain to the upside. If we can get a close above, we've got 11 minutes left. Close above, wick down, we can trade it up towards the all-time highs. NASDAQ, let's set the alerts. In fact, let's get rid of these. Okay, add alert. So how many of you are using the alert function now to keep you posted? You don't need to keep watching the charts, because keep watching the charts is going to be probably more detrimental to you than setting alerts. Setting alerts, long breakout. Let's have a look here. Uh, short breakout. So that's in DAX. Okay, so the DAX, we're going to look for buys above 22,771. While we're at it, let's stick an alert in there. Oh, gold's breaking. Here we go. What time frame is that? 30 minute. All right, we've got 10 minutes. Now, this could be very kind to us or not so. If you want to take a momentum entry, guys, then you're going to do that just above here, but that's your personal preference. What I'm going to wait for is if we can close above, wick down, we'll buy the highs. Now, it might mean that I missed the trade. If you want to look on a lower time frame, then this is, you've got to wait 4 minutes. So using the 5 minute, if you get a close above, wait for the market to come back down, then we can buy the highs. Anyone use the momentum entry? Did anyone use the momentum entry, or you all been? I stopped paying. Yeah, there's no need. You can have multiple alerts. Yeah, no, there's no point paying for TradingView. Yeah, no point paying for TradingView. Free version is plenty good enough. So look at this, waiting for the candle to close. Was it a smart decision, or are we missing a trade? All I can tell you is, no matter by waiting for the trade to close, I'm not sitting here going, oh my God, I'm in the trade. How do I get out of it? How do I manage it? If we can close above, if we close above, then fantastic. Maybe we get an opportunity. So think about this as well, guys. So by watching the 5 minute, so this is the second 5 minute candle. I'm waiting for the pullback and buy above. Good man. The trader, is that Terry? Is it Terry? Oh, I know it's someone that's got multiple accounts because they keep changing. The trader and avocado, I think both said, look, here we go. It's how we doing, Terry? You well? So look, 2 minutes for the candle to close. Now, when we look at this is if the candle closes well, we know this is the second 5 minute candle of a 15. So if the third 5 minute candle is a bearish candle, can we buy above the high of this high without waiting for a wick down on the 15? I've just realized, have I not got a webcam on today? There we go. So, not that you want to see me, but there I am anyway. Uh, so what do you think, guys? If we got if this next 5 minute candle closes bearish, think about the setup, think about what that's telling you. Come on, Paolo, what's more important? Fatherhood or trading? And typing on our YouTube chat. Only joking, buddy. That's what we like to hear. How is your little boy? Is he good? Yes, I'm placed. Oh, bit early, Frankie. Bit early. Because if it closes bullish, then you've not had a wick down. You've got to wait for that candle to close. You have to wait for the. Okay, guys, you're missing my point. The 5 minute candle has to close. If this 5 minute candle closes bearish, do we need to wait for a wick down on the 15 minute candle? Because remember, this, and this is the 15 minute candle. When this one closes, the new 15 minute candle will form or start on the next 5 minute candle. So we've got 3 minutes now for this candle to close. Mm, mm. Yeah, so we've got to wait for the 15 to close, guys. Got to wait for the 15 to close. There's the all-time high. So we've still got plenty of room. Well, not if it keeps going. 2 minutes for the 15 to close. 4-hour candles, very, very bullish. Hourly candles, significant, really, really bullish. Look at that hourly candle. So this would be a prime opportunity, right? So for those of you that heard me speak about flexible risk, in fact, let's change the screen that we're looking at. We're going to come across to potential trade. Let me move that there. Okay. So normal lot sizing on gold is 3.5 lots. What I'm gonna look at doing, if it sets up, now look at this, it's pushing how many? 38 pips. So we've got, there we go. Now we're waiting for a wick down. I'm not going to trade it here. It needs to wick down. So if it comes down, and if we test this area, what I'm going to do is I'm going to, in fact, I can't do it with magic keys, but what I'm going to do is I'm just going to put a buy limit in here. This is for less than a third of my normal risk. 44. I'm going to move my stop in a second, just rough numbers. Okay, so what I've done is I've placed a buy limit in on this area here, and should the market come down trigger, we'll be in the trade, but I'll also put 2.5 lots above the highs. So I'll get my full risk on should it come down and trigger. Okay, so this is what I'm going to do here. So slightly different. Yeah, 355, 75. Now, if you just want to be a buyer, guys, then you can buy above the high of this wick now. Now that you've seen a wick down of around 17 pips, in theory, you can be a buyer above the high of this. Now, if we break above the high of this and go 10 pips, I'm going to cancel the order because in theory, that's my target done, my first TP done. Make sense, guys? So the way we're looking at this right now is want the market to come down. If we're going to form a bottom wick, I want it to come down here. We tap our trade. This is massively reduced risk, less than 30% of what I would normally risk. And then if it does tap it, we can put the rest of the risk on above here. So 2.5. Now, what I'm going to do as well, if it comes down to, let's say, tap 29, 49.50, somewhere here, then I'll put just the 2.5 on at 52.73. Yeah. So just seeing if we can come down. If we can, then we're just going to place the order. Here we go. So that's the 2.5. So that'd be the full risk now, should it get triggered. Right, modify. Uh, well, if price just triggers this order and goes 10 pips, we'll cancel this order. I'm just gonna put a stop here, 29.48. Um, take profit, 29.50, 56. So price is coming into the area to tap. Oh, very close. All right, what's going on with it? Uh, what's the, keeps flirting with the entry, but the only thing that's not triggering this right now is spread. Every time it's touching it, it's the spread that's not triggering it. Hey Rich, how are you? So basically I've got two orders in right now on gold. It's a flexible risk. So meaning we've seen the market break out, we're waited for a bottom wick, and I've placed an order here at one lot, so just under 30% of my normal risk on the level, stops underneath the candle, and then the rest of the risk, 2.5 lots above the high. Okay, so now we're in reduced risk. Okay, so let's see what happens here. Again, like you see, we're risking very little money, but in theory, we've got 45 pips potential reward on a small amount, which would give a nice about 0.4, 0.5% onto the account. But we'll get to break even on this relatively quickly. What I want to see is I want to see momentum shift. So right now what we're seeing is we're seeing the market selling off into structure. And we want to see the buyers come back in, and that'll be turning the 5-minute candles from bearish into bullish. Okay, so now we flipped. What we can do is we can move that stop up underneath the low. We've Okay, so I'm at break even now. At 20 pips, I'll take half off. There we go, half off. So basically what we've done here now is that bit, we're kind of de-risking the initial trade. So, and now what happens is if price comes down and breaks its own low, I'll just move it forward a little bit so that it covers any sort of commission charges. So look, we got in theory 9 pips there by the time spread was sorry, not 9 pips, 18 and a half pips. At one lot, you got 8.95, so it's 16, 17, it's 9, yeah, it's just under 18 pips. So if we get stopped out and it breaks its own low, then we cancel this order up here and we wait for the market to go and do whatever it's going to do. Okay, so all we've done is we just added a little bit of, yeah, nice, 20 pips, well done, buddy. I just took half off. So if we break the low, remember what the plan of action is. This is just a low risk. So once we break the low, we're gonna kill the order if it breaks the low. Anna, 20 pips. Well done, darling. That's fine. Yeah, move it up quickly because there's no confirmation. Remember, this is a lot more aggressive way of doing it, but we're waiting for the bottom wick to form, but we give it the best possible chance of being profitable because we're buying at structure. We're buying with trend. Yeah, I've got full target here at, yeah, 20 pips, low risk. But look, it's you just add whatever it is, I don't know, 0.1% to the account. No, if you can add 0.1% to the account every time you trade, brilliant, easy. But that's it. That's the second time now we've had this setup in live stream over the last 10 days or so. When would you use this method? Now. Breakout trades. It has to break out, has to. So this is just flexible. It's a breakout trade, but what's happened is the breakout went quite a bit away from the entry, from the level. If you look at where it closed, what, 47 pips above the level. So we needed price to retrace in order to place a trade. But how can we make more money from that is if price comes back down to level, we can place a very small percentage of our normal risk at the structure. What's that breaking? Nasdaq shorts. Let's have a look. Oh, okay. Nasdaq shorts. Okay, we've got 6 minutes. I'll come back to Nasdaq in a minute, but I'm just going to stay on this because we have an order placed and Nasdaq hasn't broken the level. I placed the alert just above the level so that it gives us time to have a look. No, it's a buy limit. So the buy limit goes in here and the buy stop goes above the highs for the rest of the position. So if you traded at one lot, let's say you trade at one lot, I'd put something like 0.3, 0.25 here, and then 0.7 or 0.75 up here. So you have a buy limit for 25 to 30% of your normal risk and a buy stop at 70%. So if the market does keep going down against you, you lose little. But if it does go with you, if you get in, then in theory, the money that you're missing out on from because you've got a big old, you're capturing a nice chunk of that before it even triggers your order. Yeah, perfect. So you use 33% of your risk. Okay, NASDAQ could be the one. Right. Let's get rid of this. We're gonna go to NASDAQ. All right, we're breaking. It's a simple thing now, guys. 4 minutes. If it goes without us, it goes without us. Oh, and it might just do that. Hmm. Yeah, forget it, guys. Hold on a second. Why does that look so different? NASDAQ 30. Ah, hold on. Not yet. Right, let's wait. Yeah, this is fine. So how many pips have we banked today, guys? Right. I need I need 20 comments on today's video, otherwise there's no more live streams from me. I want 20 comments. If it means you have to get your friends and family to put a comment in, you do it. They don't have to be nice comments. They can be any comment. But let's yeah, you can stop laughing, guys. Uh, mm, right. Let's right. We have 1 minute. Right, guys. No, I'm not gonna hear. And I tell you why I'm not gonna do it here. Because if there's a market that will ever rebound and catch you at a certain level, yeah, there's no trade here. There's no trade here. We didn't get a wick up, and I won't do a flexible or dynamic risk, whatever you want to call it, on this. If I was buying, then I don't mind. But what indexes, literally, the one thing that you know is if you see a strong move down, anything can create a freaking horrendous dead cat bounce. So there's no way I'm going to trade that like that here. So yeah, if you get a wick up, then you can look to sell the lows. But you know what, guys? What are we? 2 o'clock, 3 o'clock. I'm going to call it a day. I'm going to call it a day. So let's close that one down. I've closed my MT4 down, or I should say MT5. I've closed it down. Let's come over here. Uh, Gold is about to break the highs. So look, this is perfect for gold. Anyone that wants to trade gold, this is perfect for the longs. Yeah. This is basically what I was saying about the 15-minute and the 5-minute, because you don't need to wait for a wick down here because this 15-minute candle is your wick down. So when you look at the 30, there's your wick to work within. So buy stop above the highs. There's your wick down. You can buy above the high, trade it into the all-time highs. But that's it. I'm done, guys. I'm not touching anything. And to really make note of, I'm not doing anything. I'm going to close the screen. I'm going to end the live stream. I'm going to go not put my feet up. I'm going to do a bit of content work now. But guys, just let me know if you placed any trades, how many pips you got. And place some bloody comments, please. Like it, share it. The idea is we come in, we don't need to sit here for hours and hours and hours. We come in, we made a little bit of money. Not much, $100, but it's pips, right, guys? And what do pips make? Pips make prizes. Lovely. Who's going to place the gold long trade? Anyone placing the gold long trade? Mm, no, good. Gandalf will. All right. Well, good luck, guys. Stay disciplined. Don't just jump into things because it's Anna's in it. Anna's in it. Don't get greedy, guys. Don't get greedy. All right, guys. Have a great day. Rich, thanks. Yeah. Take care, everyone. Comments, please. Comments, please. We'll see you later. Take care. See you in the morning. Yes. Bye, guys. Bye, 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 bye. Cheers, Paolo. I'll send